On Monday, the U.S. Securities and Exchange Commission, SEC, pressed a slew of charges against the operating company for Binance US and Binance founder and CEO Changpeng Zhaihao, marking one of the agency's most significant enforcement actions against the crypto industry in history. The 136-page filing accused Binance and Binance US of partaking in unregistered offers and sales of crypto asset securities while serving the function of an exchange, broker-dealer, and clearing agency without prior registration. Binance US and Cheese offered unregistered securities to the general public in the form of the BNP token and Binance-linked Bust stablecoin, which also alleges that Binance's staking service violated securities law. There are similar charges against BAME Trading, which is the operating company for Binance US and Binance itself. The SEC alleged that Binance allowed for commingling of customer funds, that Cheese was secretly controlling Binance US. In general, the lawsuit claims that Binance and Cheese exercised control over Binance US and the assets on its platform, despite the pretense of independence from the American entity. The SEC also alleged that a number of other tokens, including the native coins for the Solana, Cardano, Polygon, Coti, and Algorand blockchains, Filecoin Network, Cosmos Hub, and others are securities. A Zio-controlled entity called Sigma Chain engaged in wash trading at Binance US to inflate the trading volume and valuation of certain assets on the platform, the SEC alleged. The SEC revealed internal struggles U.S. CEOs had with Z's and top Binance officials controlling the U.S. operations despite assurances of independence. The former U.S. CEO Brian Brooks said, "I realized, I'm not actually the one running this company, and the mission that I believe I signed up for isn't the mission, and as soon as I realized that, I left." Brooks had particular worries about what Merit Peak and Sigma Chain were doing on the Binance US platform. Also of concern, Binance had access to Binance US's wallets and assets, and had access to the US entity's custody tools and private keys. The company also tapped market makers, specifically Merit Peak and Sigma Chain, to boost trading volume on Binance US. This created conflicts of interest between Cheese and Binance US customers. The SEC's lawsuit against Binance should be a big blow to real investors' confidence in cryptocurrencies, as it showed that even one of the most well-known exchanges was not immune from regulatory scrutiny. But this caused a massive sell-off across all market, leading to one of the biggest crashes in cryptocurrency history. Bitcoin price analysis. Bitcoin has been trading inside the descending channel pattern for the past several days. The bulls pushed Bitcoin above the 20-day EMA, $27,083 on June 4, but the price of Bitcoin dropped nearly 20 within minutes of the SEC's lawsuit announcement. The price turned down on June 5 and plummeted below the immediate suppo at $26,500. The selling picked up momentum, and the beta-cust pair dropped into the crucial support zone between $25,800 and $25,250. Buyers are expected to guard this zone with all their might because a break below may result in long liquidation. The pair could then descend toward $20,000. ETH broke above the falling wedge pattern on May 28 and successfully held the retest on June 1, but the bulls failed to start a new up move. This gave an opportunity to the bears to make a comeback. Sellers tugged the price below the moving averages on June 5, which accelerated the selling. The Ethris-Tat pair tumbled below the resistance line of the wedge pattern. If this level fails to hold, the next stop could be $1,740 and then the support line. This negative view will invalidate in the near term if the price turns up and breaks above $1,928. The pair could then surge to $2,000 and eventually to $2,200, where the bears may again mount a strong defense. It also raised questions about the legal status of cryptocurrencies and their potential classification as securities under US law. The incident underscored the importance of transparency and accountability in the crypto space and served as a wake-up call for investors to exercise caution when investing in digital assets. While the market has since recovered from this crash, It remains vulnerable to sudden shocks and regulatory actions that could impact its stability and growth prospects. The SEC's recent action against a cryptocurrency exchange has sent a clear message to other exchanges that compliance with US regulations is not optional. The consequences for non-compliance can be severe, and this could lead to tighter regulations on all cryptocurrency exchanges going forward. While this may be good news for investors who are concerned about the security of their investments, it could also mean increased compliance costs for those who want to trade on these platforms. With the SEC taking action against one exchange, it is likely that other regulators will follow suit. This could mean more stringent KYC, Know Your Customer, and AML anti-money laundering requirements, as well as more robust security measures to protect investors' funds. While these changes may be necessary to ensure the long-term viability of cryptocurrency trading, they will also increase the costs associated with trading on these platforms. Investors should be aware of these potential costs before investing in cryptocurrencies or using cryptocurrency exchanges.